And welcome, everyone. Welcome to the TriggerCharts pre-market rundown for Friday, November 20th, 2020, which reminds me it's my mother's birthday, and I better call her because my mother gets a little cranky when I don't call her for her birthday. Anyway, I'll make sure to call it right after we do this discussion. By the way, for this discussion, we are doing this for educational purposes only. This is not an offer or a solicitation to buy any security at all. What we're really doing here each and every Friday is going through some great opportunity setups, if you will, from a technical analysis utilizing the TriggerCharts platform. The indicators like the Commander Series, the Aileron, the Altimeter, the Radar, all the things that actually provide you a leg up on others that are using standard and I would say old school types of indicators to find out what's going on with their stocks. So we're going to go through that today. I want to mention a few things. First of all, I'm going to put in the chat for you right now all of the indicators that we talk about and many others that we have that we don't talk about so often are available on the trading app store over at TradeStation. All of those have a 10-day free trial. So you can check those out and see what you like about them, if they fit for you, if they work for you. Also gives you 10 days of unrestricted use so that you can actually do some paper trading and figure out what's happening with regard to if it's something that you can use and fit into what you do. So with that, let's get into some of the discussion today and talk about some of the important things that are moving markets, because what we do on Fridays, for those of you that are new, is we kind of go through not only the technical analysis, some of the stocks that you have, some of the names that you want us to look at, whether the futures or Forex, equities, whatever they may be, but we also look at the specific fundamentals and underpinnings from an economic standpoint, just to get a feel of what's happening with markets, kind of looking back and looking forward. So that's what we're going to start off with today. I'll ask you if you want me to look at any particular symbols or names, put them in the chat, probably right on the bottom there where you see that there was a blinking before, right into the Zoom chat. Put the symbols in there and we'll get to them by the end of the show. One last thing, all of these discussions are recorded and are available on TriggerCharts.com and our YouTube channel. So make sure to check those out. All right, where are we? Well, we got a little frothy again. The KRI indicator, which is the key reversal indicator, provided us with a +6 on two separate occasions. Finished out at a +5. I think it's about a +3 right now. Let's take a look at that where we are. Right now, we're at a +2 finishing off the day yesterday, but I want to show you a couple things. There was 2 days that we saw that the flashing light of a +6 closed at a +5. But remember something, when we look at this particular indicator, when we start getting into the +5, +6 area, that means there's some froth that's developing. And you see historically those times that there was significant froth, particularly with these magenta colors and peaks, we often saw these levels not hold very long and resolve lower because some of that excess had to be removed from the markets. Too much speculation, too much excitement, anticipation, overall enthusiasm that really builds up. This is a psychological indicator that puts together several different components to look at where markets are from a momentum standpoint as well as psychological standpoint, looking at kind of a fear-greed concept. But it is one of the things that I have and I utilize quite often in my toolbox just to look at where we are. Are we getting to a point that things are overdone and may in fact see a quick turning point over the next 2 to 3 days? Or are we in a situation where we're just okay, we're in equilibrium? That means that trend will generally lean towards the bullish side of the equation. And you know, about 80% of a stock's movement can be attributable to the market's movement. So with that in mind, you have to think about, well, if the markets are moving in a specific way, how are my stocks going to do? Or better yet, from a trading standpoint, where should I be leaning? Should I be leaning short? Should I be leaning long? If I do have shorts in a swing position, should I consider maybe moving out of those? So this is something that is really key to the understanding of utilizing technical analysis, the overriding market sentiment and feeling. And that's something that can be used. It's only used on one symbol, SPY. And really the SPY is just a trigger to light up all of the indicators underlying this. If you put in another symbol, this will not work. It is not so much that you want to look at symbol by symbol. This is a broad market indicator. And that's what we use this for. So right now, we're back down to a +2. We saw that resolution over a couple of days before. Coming into today, we're seeing that The Dow Jones futures are down about 70. The S&P futures down about 7 points. And the NASDAQ, again, due to this idea that we're starting to see more close downs, shutdowns, lockdowns, stay-at-home orders, is starting to move up again with the idea that, you know what, that worked last time, maybe it will work again. So let's get back to our update here. The other question you have to ask is whether this value rotation into away from growth is something that's kind of done, right? We saw this incredible rally with energy, with financials and the banks, some of the utilities just blasting off incredibly over the last couple of weeks. We've seen this before, not at this degree, but we've seen this before where those stocks start all of a sudden taking off and everybody thinks that, wow, value's back in play. And then it just reverts back to the growth again, the technology shares, healthcare, consumer discretionary. Right now, we are starting to see that it is that excitement is starting to wear off a little bit already. About 2 weeks into that trend, we're going back to seeing the NASDAQ do well, the Dow not doing so well. That's kind of the way you could look at it a little bit. Value holding up, not as strong as we are seeing with the with the growth. One of the things, this should say SPACs actually, not SPAs, SPACs and EVs. Pretty much anything right now that is EV, whether it's a battery company, a charging company, a car company, a motorcycle company, a trucking company, a delivery truck company, anything EV has been on fire. Many of these are held within SPACs, special purpose acquisition companies. And we are seeing that there is a bit of euphoria when it comes to that. Some of the names that you may be looking at is like BLNK, BLNK, Blink Charging, Plug Power. I mean, those stocks up 1,000% or 800% this year to date and moving up dramatically over the last few days has been pretty incredible. One of the things we're also seeing is the continuation of vaccine news. You know, it used to be Mondays were Merger Monday. Remember that? Tuesdays, Turnaround Tuesday. Mondays have become Vaccine Monday. And then each of these companies is providing significant amounts of data, information, news releases almost every single day. We saw another one from Pfizer today looking to do the EUA, which is the emergency use authorization for their drug very soon, talking about how many doses they will have by the end of the year. I think it's 50 million doses. I think it's 50 million doses, which will be good for 25 million people because it's double dose. And then I'm sure we're going to see an announcement from Moderna, AstraZeneca, and all the other companies that are involved in this. So this is something that we're going to see hit the tape, probably going to wear off the excitement eventually. We saw that companies like Gilead, which had that great announcement with their remdesivir, I guess it was a couple of months ago, like, wow, this is a great treatment. Everybody's going to be using it. It's being used in hospitals. It's really helping and all that. And then we saw the stock. We should look at the stock in a second. We will. Gilead, it's cutting under the 2018 price. How is that? Remember something. Whether it's Pfizer, whether it's Moderna, the government doesn't want these companies, well, I shouldn't say it doesn't want these companies making a profit because that's okay, but they want to give these away for free. If they give them away for free, they're not going to pay up. They're going to force these companies to bring down their costs significantly on the distribution of this. And because the distribution of these drugs is so difficult, anywhere from a -20 to a -70 degrees that it has to be stored at and then held at before it's defrosted for delivery. You can't get negatives. Listen, you put a 70-degree item into your arm, it's not going to do too well, right? It's going to be a big problem. And so what's going to happen here is that we have this distribution logistical problem that's going to persist for a while. And that's going to be an interesting situation. So the thing is that these companies it's a big question of whether or not they're going to make significant amounts of money like they would with other drugs that they have in their pipeline. It remains to be seen. But look at the stocks, look at how they've reacted to the news, and then the sell-off that preceded the next 2 or 3 days. And the Gilead is a really good example of something that you got to scratch your head and say, like, hey, like, I don't understand why this is being used to such a degree, and the stock is cutting its 2018 lows. Makes not a lot of sense. All right, but We've seen that this news is going to progress. We saw first the 90% or better for Pfizer. Then we saw that Sputnik 5, the Russian vaccine, came out at 92% or so. 94.5 was then out by Moderna. And then Pfizer came back and said, well, we're actually at 95%. So this kind of race to get in the news and to be the one that actually gets first emergency use authorization for this and kind of the spotlight and the pat on the back, I think is something that they're really aiming for, and rightfully so, because if we can come with a vaccine and it is widely used and it does in fact create immunity for the masses, this is very good, not only for the economy, but for the whole entire world at large from a structural standpoint, an emotional standpoint. I mean, I don't know about you, but I'd like to get back to where we were, back last year. Let's call it 2019. Take this whole year of 2020, pluck it and get rid of it. One of the things that really started working when the vaccine came out was leisure travel. We saw that the back to work stocks were starting to rise again. The value trades, the banks, as we saw that there was a consistent differential between the spread of the 2s and the 10s. The 2s and 10s are the 2-year yields, 10-year yields, started to widen out dramatically, and that's very good. Banks need a normalized yield curve in order to do well. It's basically their profit center. Look at what's called net interest margins, basically the spread between the long end and the short end of the curve, and therefore in between is what their margin is. And that's how they make their bread and butter. That's how they make their money. So what you see is now a continuation of that. We see a normalized curve that just developed over the last few months and really started to expand very nicely. And that's why banks started to get some lift under them. Pretty incredible over the last few weeks. But there is a realization that no matter how they get this vaccine out, the pandemic is still here. It's raging out of control. 250,000 deaths in the U.S. The worldwide is a problem. Asia seems to be like beyond it, by the way. I guess they follow the rules of wearing masks, social distancing, and contact tracing. We just can't seem to do it here. Whatever your feeling is and political side of whatever this discussion is, the facts remain that they seem to be doing a lot better than we are and have a lot less of an outbreak. You got to admit, no matter what your thinking is on this whole thing, something is not right in the U.S. in how this is all spreading. Whether it's because somehow our bodies are more susceptible to it, or we're just not following the rules like we should because we're arguing with everybody about best practices and it's hurting us, is causing a bigger problem. More closings. New York just closed public schools. Private schools are still open. Doesn't make any sense. Probably going to follow up over the weekend, I would think, that if the positivity rate stays high with closing down restaurants, bars. Right now, curfews in San Francisco and California, I think implemented today by Gavin Newsom. We're seeing that other areas, El Paso took a couple of weeks break. We're seeing that other areas around the country are starting to also slow down. That means that we're probably going to rotate back into the stay-at-home stocks, away from the back-to-work stocks. I'm going to see this daily, all this come out. What I'm saying about the vaccine is, while it is really good, the fact is that we have many months till actually it gets into the system. No matter how hard we try, even if we snap our fingers today and say, this is going to happen today. There are 200 million, 300 million doses available right now. There's a lot of questions about how to get it to the people, whether people are going to take it or not, which is a whole different discussion, and how effective it's going to be. So something to keep on top of, no question about that. The longer this goes on, though, this pandemic, the more we're going to have problems with the jobs market, retail sales, people will pull back. And then you have to look at stimulus. Now, there's been a lot of discussion about stimulus, right? $2.2 trillion plan, 2.0 trillion, 1.5. Now, the Republicans are saying, hey, listen, you know what? $500 billion, a targeted plan is probably the right way to go. I tend to agree with a targeted plan. Whether $500 billion is the right number or not is another story entirely. However, one of the things that happened last night late was that Treasury Secretary Mnuchin, for some reason that I'm still unclear about, told the Fed that they want back their money that they gave them, the unused money that was available for the Fed to do things like the municipal bond buying and the safety net, if you will, for corporates. Some of the different short-term loans, these kind of things were being pulled back. It's like $450 billion or so that can be leveraged significantly to, I think it's like $4 trillion or something like that, is a 10-time leverage availability. That is being pulled back by the Treasury. and the Fed is not so happy about that. That's where we saw that sell-off overnight. Now, I'm sure that Treasury Secretary Mnuchin is somewhere on the news right now talking about how it's not a big deal, how they're going to use it for other things, how it's actually going to help. It's going to be better for the economy. But I would watch certain things. We're going to talk about BLNK. We're going to, I would look at the municipal bond market and see what happens there, how this all plays out, because that safety net now needs to be, if it's taken back, needs to be reallocated and re-voted by Congress to give it back to the Fed if they want to do that. So therefore, it may take a little time if we get into an emergency situation in the future. Tesla's moving into the S&P 500, something that was expected for a long period of time, but just like, is this really going to happen? Well, they reached their profitability goals and requirements the S&P 500 have, and now they're going to move it in. Now, the problem is that Tesla is such a big company from a market cap standpoint, $400 billion, that they are going to have problems getting this in. The buying that you saw over the last number of days, of course, retail investors following all this in. But on top of that, institutions, particularly those in the passive space, index funds, et cetera, are going to have to add Tesla to their portfolios. Active managers who have said, hey, you know what? Tesla's trading at 1,000 times PE and a few, 50 times sales or 18 times sales. This is a very hot stock. We don't want it. Are going to be forced to put Tesla in if they want to start tracking the S&P 500. It's going to be about the sixth largest company in the S&P 500. It's going to impact the NASDAQ as well, but yet the S&P, it's going to be significantly more volatile considering the fact that it has Tesla in there right now, taking about a 1.5% position, also making Elon Musk the third richest person in the world, knocking back Zuckerberg by one spot, or maybe in the U.S. And I guess the question is, what does it say about valuations? Where we have these crazy valuations and S&P is looking to put that in, which is usually more of a conservative move by them. I think it's all about the MOMO and the FOMO, both that not only individual investors have, but what the S&P is looking at too. They want to catch up to what the NASDAQ did, and they got to pump in a lot of names, just like the Dow did recently, or has done with putting Salesforce in there and Apple as an example. Economics. Well, the general recovery does continue. We do see that. Employment is concerning. Retail sales, it was at 0.3 versus 0.9. There's probably some concern over the fact that many of the benefits that have been put into place will end at the end of the year. We're talking about 6 weeks from now, right? About 6 weeks from now. That's an issue. Somehow we're going to have to get through Congress approving a plan to keep the government open from a shutdown. We got to do a continuation plan there, which they'll do. They'll get that done. And then somehow we got to come up with another stimulus plan, or there's going to have to be some kind of executive order. That may be why Mnuchin is pulling back money from the Fed to put it back into the Treasury that could be used as an executive order by the president in order to provide further unemployment benefits. That's something that could be the case. So watch for that. I think that that's probably what, I haven't seen what he said the idea was behind this and why they're doing this. But if they can, this would require no congressional approval and have a lot of money in the Treasury that could be then utilized for things like employment. And that may be what the setup is right now. Next week, we have consumer confidence for November. We have durable goods coming out, PCE prices, which are important. That is the Fed's favorite inflation, personal income spending, et cetera. We're going to talk about a variety of stocks, but I think let's go right to those and then talk about yours. So Tesla down a little bit today on the mark, but look, Tesla got right to their all-time high. This is what you're looking at as the Commander series. And the Commander series comes with something you don't see at all, which is a multi-time frame radar screen, 30-minute, 60-minute, 240, daily, and weekly. You could change these up if you want. This is what it comes looking out of the package, if you will. And you get two charts on the bottom. This all just click and play. You just click, 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 and it just goes, okay? So what happens here is what you're looking at is the aileron. You're looking at autopilot. Aileron is a separate package, the bottom here. I like to use that as momentum play so I can take a look at what's happening with momentum. In addition, the more confirmations I can get that give me information, the better I feel about a trade. In other words, the confidence is raised about a trade. So therefore, I use multiple indicators to make sure they all line up. So Tesla, did bounce off. It was kind of playing into this level here, got support, bounced up. I don't think there's anything to really look at here. Overheated dramatically. That doesn't mean excuse me, that doesn't mean it's not going to keep on going up due to the fact that we are seeing a significant amount of buying that has to take place. It probably will lay off a little bit and start to get a little close, slow down as we get closer to the day when it's going to be added, and it's sometime in the middle of December. Blink Charging, I was telling you about these names like Blink and Plug Power. One of the things we've talked about over the last few weeks was, hey, you know, a great base here is 754 on Blink. What we did see, I'm going to raise this using my drawing tool up to this level right there. As we got above that level, which is about $11.16, could have been a really good call to get long. Now, if you waited for the yellow, which is an alert in the Commander series, to get long, you would have got long the next day, somewhere probably very close to that level. I call it 1150, and you would have stayed long. This is on a daily chart if you're doing a swing trade from 1150 up to about where we trade now, 1888 up 2.95, a very volatile stock. But pullbacks are possible at this point. You'll see that the aileron momentum really picked up and is staying very solid in the green right now. And this is one of the names that are in that genre of electric. The other one is Plug Power as an example. Maybe I typed it wrong. There we go. Plug Power, I mean, from $6 back in July all the way up to 23, backing off a little bit. You have a little bit of a range right here if we could open this up, and a consolidation on your 30-minute chart, up a little bit today, about 19 cents. Interesting pattern here. It is obviously blown up dramatically. It would be great to see a pullback back to about $20, $21, possibly even, I'd love a $19.17 to see if we could bounce off of that and see if a new altimeter will be drawn there. Amwell, this is an interesting stock. This is an IPO that came out. One of the things I like about IPOs is if they can get past their post-IPO level, they can kind of kick back and then get back up. This one is not looking like that. This one is a Teladoc, a company that does, a virtual doctoring, if you will. Kind of cool company, actually. IPO'd at about 23, came right back down, right about down to the lows where the IPO came out in the 21, starting to bounce up about 22 cents today. Now, there's few data points in here to really draw any of our important graphics on this. We need a little bit longer on a daily. You can see it on a 30-minute to the left here. I want to show you Gilead real quick. Let's go there. I mean, Gilead, actually, the WHO came out last night, I don't know if I said this, and said it is not recommended that Gilead's remdesivir, whatever the name of that stock is usable because it has not provided any benefit for anyone. And they really put a knock on this. But if you take this back, let's look at this on a weekly basis. You can easily kind of look at this. I mean, look at this. This stock is what? I don't even know where it is. Let's go. It's below 2017 levels. And this was supposed to be a company that had a great treatment for this COVID. So you got to be careful about this. You know, Pfizer came out with this great number. It got spiked up to 39, came back down to 35. Took back all of its post-announcement news. What was the other one? Moderna, mRNA. Still holding up higher, up about 2.5% today because of the fact that Pfizer came out with their information as well. And we are seeing that it is holding. There is not, it's kind of in let's see, right in 95. It's in the zone right about here. I mean, you got to get above the 100 level to get this going again, but there really is not a lot of significant support here. You got a big hole on the bottom here when I put the radar on, and that is a question because if you start dropping below here, there's not a lot of volume that we saw in this range between about 89 and about 83, which is a pretty significant range. I like to turn this off to keep it clean and turn it back on and off when I want to use it. Macy's came out with earnings yesterday. Terrible same-store sales, just awful, just god-awful. Stock managed to kind of climb up from down at $8 where it opened up to about 9 and change. A lot of people are pretty bullish on this. A bit of a rounded kind of look right here, which is interesting. I still think you need to get above this 9, really $10 level before you want to get something going here. Even if there was no pandemic, even if there was no COVID, even if no stay-at-home orders, I still think this is a terrible company fundamentally. Not to mention they added tons of debt recently. Planet Fitness spiked up again. Looks like the Pfizer chart spiked up dramatically to 85 on the news of a vaccine has been coming in significantly, especially as we're seeing more closures happening. You know, this stock has a really good base here, probably at about, I would say right there, just use your drawing tool, 63 or so. Currently trading about 66. If it breaks down there, I think you can have some problems, even though there is some levels there. Yeah, so right now we're at a little bit of a support point from a high volume, though. These yellow lines inside of the radar. See that right there? So, interesting, but we think there's a short candidate here. Quick, Fastly. Yeah, this is a stock that we looked at. We saw it as a short some time ago. The momentum is back in its favor right now. Up a little bit this morning, bouncing off a pretty horrific earnings number when it came down here. Probably got a little bit oversold, but the short is no longer in play. It is actually a long call right now. See the short got right short right about here at 86. Closed that short at about 72? Now we're starting to see that line that I drew some time ago. This is a line that I didn't put in here just now, starting to get above. Now, I think on this one, you want to put the radar on. So when I do that and I take my box tool from TradeStation, I kind of want to draw a little bit of an area here that I think it has some range. I think that if you get inside this range here, particularly, let's see if I can do this, right inside there, you have an opportunity. So up to 90 looks like a possibility from 80 on Fastly. I still think the stock is not the greatest fundamentals, but that's another story. Space, one of my favorites. So we drew this box. I sometimes leave these boxes on just for you to look at. Once we got above this level, and if I had that box drawn on my charts, and I'll take off this study here, and I just look at the situation we have, we said that this is a big area. Look at this right here. We came right about to the top yesterday on this. Now, right now we're trading at 24.49. So where is that? Let's kind of draw that line. 24.49, give or take. I don't know if I could get exact. Well, there you go. Right about up to the top of that box. Now, you get above 24.50 or so, and in particular, 24.70. That's this line here, this blue line that you're seeing right on the top there. You get above that, you can really see a screamer here, a rocket ship, so to speak, for SPCE. Not for the faint of heart, no earnings, actually losses, but you know, this is space travel of the future for individuals. You can put down a deposit, $1,000 deposit, by the way. I think the flight will cost about $250,000. Probably well worth it, by the way. So get your trading going, get that money in the bag, and save up for a space travel. But we did launch off of this level a couple days ago, and we got a nice call on the upside here. Momentum still favors the upside here, looking pretty good overall. LRN, terrible looking chart, no question about that. But when we start to look at the fact that we're starting to round up here on the aileron, we're starting to see that it's breaking up. Not great, but yet still worth a look, because we have a range here of nothingness, a hole we'll call it, where you take a look at from here up to, we kind of stretch this out a little bit probably, up to here, up to about $27 level from where we are at 24. That's a good 12% return from where we are right now. This is one of those at-home schooling companies that provides educational services. If we're going to see more shutdowns, schools are going to have to really start continuing with this and other companies that are in that space. Somebody asked me something earlier. KSS. So some of the big box retailers, I showed you Macy's before. Here's Kohl's. Kohl's is picking up very nicely. Right up to the top level of this. I mean, obviously you break above, which we did break above this. There's nothing here. Kohl's is interesting to see a big short squeeze on this potentially. I don't think it has a significant amount of future there. ODP, Office Depot. Amazing they're still in business, by the way. That's another story. You know, you're starting to get over the top of Office Depot. You get above this 20, let's call it $30. If you can close above 30, you do have a potential for a nice short squeeze up to about 35 or so right there. At QNZ. At QNZ. Why is that? At QNZ 20. There we go. Natural gas. I don't know what to say about this. Do we all think that this trend is positive or negative? I mean, it doesn't take a rocket scientist. Let's take a look at this on a, I mean, the trend is awful. This is natural gas. This is awful. Is there any savior to this on a weekly basis? I mean, you're hitting the bottoms. Maybe you want to look at from that. I don't know. This is not a trade where I would say, oh, this is a great one to look at. I mean, we're a short here. The momentum on the aileron is still on the negative side. Starting to come up a little bit there. You got a little bit of a divergence. But I still think that when you look at this, I mean, this is not something that I would play. I just don't think that this is something that I would look at. So there we go with that. Cancel that. Cancel that. And I think is something. Oh, Sono, I want to mention. This is what I want you to look at. Watch JNK. Let's see how this plays out right now with regard to junk bonds. Look at the municipal bond one too. This was a classic. Oh, there we go. Got the line right in there. This is the classic. Looks but a 10% today. XXII 20th Century Group. They have something to do with smokeless tobacco or vapes, cigarettes in that area. Stock is. I mean, look at this thing go. Broke out above our resistance point, and you saw the momentum was doing really well and just went from about $1 up to $1.65. Those of you who like to play that area, interesting. Look, we're getting a short alert on the JNK on the 30 and on the 60. I think that's kind of interesting right now. Not down very much, but something to look at while you're doing your thing. Thank you so much for joining us today. Make sure to listen, if you're not in it, you're not going to win it. So make sure the cost factor of this is so ridiculously cheap. $149 a month for the Commander Series, a couple of bucks more if you just want to have the aileron on a chart. Think about that. That's one trade. If you can't make money on one trade from this, you should hang this up to begin with. You are going to do it. I'm telling you. All you need is a little extra confidence, and that's what this gives you. So make sure to subscribe. Anybody that subscribes to the Commander Series, send us an email at support@TriggerCharts.com, and we will give you a 4-hour course for free, which is a nice coaching session. Do it at your leisure. We'll send it to you. 3-part program. I think you'll really enjoy it. Thanks so much for joining me, and I will see you again next week is Thanksgiving. I'll have to let you know we're going to do that. I think we're going to do that. Be a day after Thanksgiving. Not sure what we're doing on that day. Have a great Thanksgiving. I'll see you soon.